So a friend of mine runs a construction company in Minneapolis, and he was thinking about trying to break into the federal market. So he asked me to run some numbers for him. Basically, he wanted to know what was the market size, what were his chances of being able to break in, and how should he go about trying to break in if he decided to pursue it. So I ran some numbers, showed them to him, and he decided not to pursue federal. But in the spirit of waste not, want not, I thought I'd share my analysis with you, how I built it, and what he saw that made him decide not to pursue federal. But let's start with construction contracts are all in 2-3 NAICS series. See, construction 2-3. By the way, where I'm finding all of this is in the North American Industry Classification System Manual. Okay, within the 2-3 series, we have three major subclusters. We've got the 236, 237, sorry, 236 is for construction of buildings, 237 is for heavy and civil engineering construction, and we got 238, specialty trade contractors. Now, as you can see, the 2-3 series breaks down into about 31 sub-NAICS codes, so there's probably a code out there for the exact stuff you want to do. All right. There's also one other non-2-3 NAICS code that I want to call out, and it's these ones right here. 5413, that's for architectural engineering and related services. So if you do architectural as well as construction, this may be where you want to look. All right, now let's take a look at the market itself. So here's the analysis that I ran for my buddy. All right, so take a look. We already talked about the NAICS codes. Here's the market. So what we found is that the total federal construction services market is about $40 billion a year. Of that, about $20 billion is set aside for small businesses, and of that, about $10 billion is actually realistically winnable by new vendors. And we'll talk a little bit more about what it means that something is winnable. All right, now, so if that's the market, let's look at competition. All right, so first thing we gotta look at is, well, how many bids does the average award get? So across all federal, we got about 6 bids on average for every award. So, statistically, that means for any given award you go after, contract you go after, you have about a 15% chance of winning. Now, if we look at that, but for construction services, the number goes down to 4 bids per award. There are 2 ways to think about that. Way number 1 is to say, wow, only 4 bids per award. That's good news for me. I went from having a 15% chance of winning to having a 25% chance of winning. Good news. Second way to look at that is to say, wait a minute, people aren't dumb. They must know that there's something going on that where they have a lower chance of winning. And from this data point, we don't know the answer. But, all right, here's the next thing we found, which is around concentration. And concentration just basically means of the highest achievers, of the biggest competitors in the space, how much of the market do they get? And what we looked for was, well, how much of the market do the top 10% of small businesses get? And what we found is it's a lot. It's about 80% of the entire market is being won by these top 10%, these largest smalls. And, all right, so that's a pretty big yellow flag, or at least, maybe not a red flag, but definitely a yellow flag. We have lower competition, and we have a small number of companies winning a disproportionate amount of the work. So that leads us to believe that maybe there are some monopoly forces going on here that are keeping competition down. So let's look at a third factor around competition, which is the percent of new businesses that are winning work. And what we saw is that every year, about 7% of all the businesses that win federal construction contracts were less than a year old. And actually, that's a pretty reassuring number. It means that despite any kind of competition hurting forces that we're seeing over here, new businesses are still breaking in, so there's a hope. So I showed this data to my friend, and to be honest, he was pretty worried because he'd heard that the federal market is dominated by insiders. You have to be an insider to win anything. And that low bid rate, that high percentage of the entire market concentrated in the insiders was pretty concerning. But I said, look, you don't do work nationally, you do work in a couple places, so let's refine our analysis to what really you could be going after. So we decided to refine our analysis to just include states that he could reasonably go after, and we decided to refine our analysis to really focus on the types of construction work that he did. But that level of analysis is going to require some Excel, so let's go to the computer. All right, so here we are in Excel, and we've already got the pivot table set up. So if you're looking for help with collecting data or setting up the data for analysis in Excel, go ahead and watch our class on federal market analysis. All right, so here's just to explain what we've got going on right now. So we're limiting ourselves to small business because that's what my friend was. He was a small business, so we got small business checked. Under the award, right now we're just going to look at the total market for his areas, the places where he could service. So we've got that with all of them. We'll be changing that here in a minute. Primary place, NAICS code. He did specifically commercial institutional building construction, so we just dialed in for his kind of work of NAICS 236220. And then primary place of performance, he works in the upper Midwest, so we've selected all the states, Michigan, Minnesota, and Wisconsin. That's where he did work. And then contract pricing for right now, we're just looking at the entire market, so we've got all selected as well. And here's what we're seeing. So if we look at the small business market from 2021, 22, and 23, we're looking right around, maybe this is around $250 million a year. Yeah, and we can see right here. Here we go. So anyway, on the low end, we're at about 280. On the high end, we're all the way up to 430. Great. So that's the small business market. Now we're going to look at what he could realistically access. So to do that, we're going to make two changes here. First, we're just going to get rid of all the awards that were submitted through a parent award. And basically, if you've ever heard about GSA schedules or IDIQs, what we just did was eliminated all of the money that was spent through master services agreements like that. Because as a new vendor, you probably are not going to have those. Great. So that's number one. Number two, let's go ahead and adjust the pricing. So most of these pricing categories require you to have DCA compliant accounting systems. As a new vendor, I'm just going to go ahead and assume you do not have them. So we're going to go ahead and just select firm fixed price because that's the easiest one for new vendors to access. So with those two changes, we're going to see that in his geographic area, in his NAICS codes, or the kind of work he does, well, on the low end, we've got $150 million being spent. On the high end, we have almost $300 million being spent. So hey, that's pretty good market size. So to set up our pivot table for competition, we've got all the awards that have been issued in our place. So Wisconsin, Minnesota, Michigan, in that NAICS code that he does work in. And here's what we got. These are the number of bids received. So at the highest, the most competitive bid, there were 17 bids on this award, all the way down to a bunch where I suspect it'll be down in the ones and zeros. All the way down here to a bunch of awards that are only received one bid, so there's going to be sole source awards. So what's the average there? So the average here, 2.9. 2.9 bids for the kinds of work he wants to do and the kind of places he'll be competing. That's getting suspiciously low. So only 3 bids leads me to believe that there may be some monopolies or something else going on that's hindering competition. And here we have all the companies that have won work in his NAICS code, in his jurisdiction, in his target geographic market, broken down by the amount of money they've won over these 3 years. So our biggest winner made about $93 million over these 3 years, all the way down to some people who actually lost money over that period of time. So what I want to look at is, so there were 167 winners. So I want to take the top 10% of those. So that's the top 16 winners. I want to see how much of the market they own. So let's just start counting. Boom, boom, boom. Boop, boop, boop. Here are our top 3 winners. And the sum was $247 million. So $247 million out of $320 million. So 200, let's just do that math, that's not good. So 240 million out of 320 million. 75%. What we're seeing here, we can see 75% of all the awards in dollar terms went to the top 10% of winners. All of a sudden, I'm not feeling so good at all. All right, keeping on, let's see how many new companies broke in during this time period. Okay, these are going to be all the companies that are more than 1 year old, and so 6 companies out of the 167 companies that won work over these years. This is not good. We have this is about a 3-4% break-in rate. This is a problem. And it's a problem for this reason. So we are seeing that only a very small number of new businesses are breaking in each year. We're seeing up here that the top 10% of winners are winning really an excessive amount of the total market. We're also seeing that there are about half as many bids per contract as you would expect. So even though this is a very attractive market, the competition, something's going on here. Something is not functioning the way it should. So my advice to my buddy was, hey, if you're ready to go make a long haul, make a long play to try to break in, really put some time and sweat equity into this, you can probably break into the market. But it is going to be a long and tough road because there seem to be some really well-established, entrenched vendors who will be tough to displace. And he took my advice. He said, you know what? This probably isn't the right time for me. I'm going to go focus on my commercial customers, and maybe I'll come back in a couple years. And you know what? I hope he does. So I hope this was helpful. And if you want more information on how to build your own market analysis, do your own sort of evaluation like this, check out these videos here, and look forward to talking with you again soon.